Hi, everyone. Delfino Aguilar here, SVP of Wholesale at Kind Lending, here with my friend Aaron Freeman for our newest edition of Rally Time. Aaron, what's up, brother?
Not too much, man. Thank you very much for having me back.
No problem. Well, actually, a lot's going on, Aaron. We had to stop filming and do this again because you had the Ratatouille killer in front of your screen, right? Your mouser, as you got the
Vicious.
cats out there, right?
Yep.
That's
Vicious cat
funny.
coming at me.
There's a cat coming at you, right? Well, there's a lot coming at us right now, Aaron. So let's jump into it. So let's just talk about the elephant in the room, and we'll just talk about this. I don't want to get into politics, but I do want to say that there's a lot going on in the markets, and everybody's watching what's happening. There's some positive movements in the stock market, obviously, right? And there's been some changes there. So let's jump in and talk a little bit about what you're seeing with that, how it's affected rates so far.
Sure. And it's a little unclear whether it was based on the election or there was some positive news about a coronavirus
Yeah.
vaccine. But, the stock market, obviously takes the vaccine news as positive.
Yep.
Rates have risen a little bit. So, bond market faded a little bit, but, we're still seeing historically low rates, and that's keeping good volume coming in the door.
Yeah, it is. We're busy. We're busy. Even with our great turn times, we're still extremely busy. And I think that's important, Aaron. You mentioned a point that to keep in mind that we're still at historic rates for mortgages, right? Still historically great rates, great time to buy and sell. We're going to talk a little bit about that further. You and I watch rates all over all throughout the day, watching different lenders and things like that. We've kind of noticed that the competitive landscape has kind of gotten a little bit more competitive now, right? And we're seeing some lenders make some price moves that are pretty aggressive. So, what are your thoughts on that?
Yeah, I think some of it is, operational capacity, right? And so, as people have a little bit more room, maybe they're pricing in a little less margin. But I think a big
Yep.
portion is also in the servicing.
Yeah.
The servicing values are coming back. Forbearance has dropped again. I think it's below 5.5% now
Mhm.
with overall portfolio. Fannie
Yep.
and Freddie are under 3.5. I think Jenny Mae is right around 8%.
Yep.
But that's great. I mean, it's down quite a bit from where it was, in the early stages of the pandemic.
Yeah, awesome. And I think you bring up an important point about servicing in our world, working with brokers, who we service when who our partner is extremely important. You and I are working on a project on that with our marketing team. So more to come on that to support our brokers, which is awesome. So good insight on that, Aaron. Something that we wanted to kind of talk a little bit about also was the forbearance piece. We mention that often because I think it's important. It's a good indicator of what's happening in the mortgage market. And you've talked a little bit at how people, even though they're in forbearance, they're still making their payment, right? So talk to us a little bit about that.
Yeah, the news that came out, and I follow Black Knight and
Yep.
their news on it. Yeah, they were saying about a third of the people are continuing their payments even when they're in the forbearance plan.
Mm-hmm.
So all this is great news, and it's helping servicing values, which is a big piece of what goes into your rate sheet.
Yeah.
Go up and keep rates low, and it's maybe back to about 75% of where it was in the early stages of the pandemic. So
Yeah.
not all the way back to where everybody trying to go all in on it, especially on
Yeah.
the government side, but definitely trending in the right direction. And I think that, that's a big reason why you see competitors, getting more and more and more aggressive.
Aggressive. Yeah. That's a good point. Aaron, one last piece I wanted to kind of talk to you a little about. We talk a lot about data, right? We're trying to be data junkies here, right? We talk about numbers all the time. one of the things that that just came out earlier a couple of days ago was Fannie Mae home purchase sentiment, right? That was up almost a 4% last month. A little bit slower than August and September. It's at 81.7 right now, but it's still a good indicator because, as you know, the fastest way to create wealth is through home ownership, right? So talk to us a little bit about that indicator.
Yeah, well, it's basically saying that it's both a buyer's and a seller's market,
Right.
which,
Right.
It's a seller's market because property values continue to increase, housing being the lone bright spot in the economy right now. But
Yep.
also with these low rates, it's good time for buyers to buy. So,
Yeah.
that sentiment shows that both sides feel optimistic that this is a good time to buy.
It is. Yeah.
Or if you're, with the sellers, they're going to get full value for their sale. So.
Right. Yeah. And I think that's an important piece. We talked about this. I feel like a lot of what we do is to promote kindness here at our company, the kind movement. Part of that is being responsible and talking to people outside of the mortgage industry too. And, I'm blessed to have a big family here in San Diego. And as I see my younger cousins start to buy homes, I think it's special. It really truly is, to see how hard they work, save their down payment, and I always guide them to work with the mortgage broker, obviously, right? But I think it's important to kind of there's a personal side to that, right? That home ownership piece is extremely important. I'm happy for everybody who's taking advantage of that.
Yeah, absolutely.
So Aaron, we to end it real quick. We have let's talk about our special. Like a couple of days left on our government special, 25 basis points on every single type of transaction for government loans. We have another one, a surprise coming starting on next Monday, right? I think November 16th, we're going to roll it. So more to come of that. So if you're looking to lock a government loan, take a look at Kind Lending. Don't forget to take advantage of that special. Aaron, thank you so much for your time. I wish we could show part of the Ratatouille killer that jumped in front of your screen earlier today. That was pretty funny. We'll save that for a different time.
That's right. Yeah, he's vicious.
Yeah, he is.
Thanks,
all right,
Delfino.
So, no problem, Aaron. So if you enjoyed this, follow us on LinkedIn, Instagram, and YouTube to learn more about Glenn Stearns and Mindy Stearns' new company, Kind Lending. We're really trying to change the mortgage industry with the Kind movement. Thanks a lot, Aaron. Have a good day, everybody. Talk to you soon.
Thank you.